Hey everyone, how are you doing? As usual, we want to discuss more of accounting. And last time we were looking at the IFRS system. I remember we hinted on how to enter transactions in ledgers. So now today I want to look at a cash book, how it looks like, and how we post information or how we record information in the cash book. So a cash book is a subsidiary book or a book of original entry where cash transactions are recorded. So in the cash book, we recorded only cash transactions. Only cash transactions. So meaning transactions relating to debtors, transactions relating to credit sales, credit purchases, those are creditors. Those ones are not recorded in the cash book. They are recorded in other subsidiary books or books of original entry. For example, purchases journal and sales journal. So in the cash book, we only record cash transactions. Now we have categories or forms of cash books. One, we have a single column cash book. A single column cash book records cash transactions only. So it only has one column for cash. Maybe I can show you how it looks like. Format. I have a sample here. A single column for it. This column is not there. It records this column for back is not there. So for it records only cash. It has date, details, folio, and cash on debit side. Then also on credit side, it has date, details, folio, and cash. So either there is money coming in or money is going out. So on debit side, you record cash receipts. Then on credit side, you record cash payments. So that is how a single column cash book looks like. But also we have a two column cash book. A two column cash book has both cash and bank columns. So it records both cash transactions and transactions by check. So when a check is received, the cash book is debited. The back column of the cash book is debited by the amount. Then if the company or if an entity pays by check, then the bank column of the cash book is credited. So that is a two column cash book. It has both cash column and bank column, like this demonstration here. This one is a demonstration of a two column cash book. So here we have on left side we have debt details, folio, cash, and bank. But also on the credit side we have the same. So if money is coming in by check, you debit the bank column of the cash book. And if it is by check by cash, of course you debit the cash column of the cash book. So if you are paying by cash, you credit the cash column of the cash book. And if you are paying by check, you credit the back column of the cash book. So that is how the cash book look like. Or a two column cash book. Then we also have a three column cash book. A three column cash book, for it, there is no big difference, only that for it records discounts. There is a column of discount allowed and the column for discount received. The column for discount received is on debit, and the discount allowed is on credit. Because if we are allowing a discount, meaning cash is going away. So now that one is also those columns are also given in the 3-column cash book. So now we are going to look at a practical example. We see how we practically record transactions in a cash book, and majorly we want to demonstrate a 2-column cash book. First, we shall create time and prepare a 3-column cash book later, given time. So we want to look at a scenario, a pragmatic scenario given to us, the one displaying there, and saying that Mukama is a second-hand clothes wholesaler. He had the following transactions during the month of December. So now on the first, balance is brought forward from the previous month. So meaning these balances were brought forward from the month of November, because the transaction was given for the month of December. So they had cash of 750,000. Then cash at the bank was 126 millions. Debtors, they had Opeto worth 13 millions. Then and Bauba 8.7 millions. Creditors, they had Honor Rutaro at 4.7 millions. On second, they had cash zeros at 15 millions 500,000. Then on the third, they banked cash 10 millions. Here shall see if they bank cash, they had cash at hand and they take it to the bank. In the cash book, that is the front entry. We shall see how that one is dealt with. Then on fourth, they received a check of 9.7 million from Feto. Automatically, that one means that the bank column of the cash book must be debited. Then on fifth, they paid for transportation of goods to the business. Transport for purchases, that one is called carriage inwards. And of course, that one reduced the cash by 1 million. Therefore, the cash column of the cash book could be credited. Then on sixth, they bought office equipment by check, 15.5 millions. Then on 7, they paid Rutaro by check 4.7 millions. Then on 9th, they received rental income by check worth 5.75 millions. Then on 7th, they withdraw 7.5 millions from the bank for office use. Then on 12th, they paid wages in cash worth 2 millions. Sales 21.5 millions by check. That happened on 13th. Then on 14th, they paid motor vehicle expenses in cash worth 4.05. Then 20th, Bauba paid 8.7 millions by check. Then on 26th, Babu rent the business by check. These transactions must be reviewed and we see what the question is saying. The transaction on 26th, Bauba rent the business 75 million by check. This one here, 75 millions by check. Then on 28th, we paid general expenses in cash, 1.75 millions. Then on the 30th, they withdrew 300,000 for personal use. Personal use means these are drawings. These are drawings. Then on 30th, they bought goods by check 120 millions. We are required to prepare a 2-column cash book and ledger accounts in her books, in the books of Mukama. The question is talking about Mukama here. A business person is called Mukama. So we are required to prepare a 2-column cash book and ledger accounts in her books and balance of the accounts at the end of the month. So this is required. But our emphasis, we want to look at a 2-column cash book. How does it look like? How does it look like? The ledgers, these ones we looked at ledgers last time, but I think I'll prepare another section to highlight on how ledger accounts are also prepared and how they are balanced at the end of the reporting period. So we can start now. We are going to take this format. So we're going to have a debit side having columns of debt details for your cash and bank, but also we shall have the credit side having columns of debt details for your cash and bank. Now, we are going to move. The question is here. Balance is brought forward from the previous month. Cash 750,000. Then bank 126 millions. But also they had debtors. Debtors, as we talked about in the definition of the cash book, debtors are not recorded in the cash book because a transaction resulting into a debtor is not a cash transaction, meaning it was a credit transaction. If they made sales, let's assume someone made sales on a credit to Opeto. That transaction that led Opeto to become a debtor was a credit transaction, and therefore Opeto won't be recorded in the books unless Opeto is paying back. If that is the case, then cash will increase and we shall debit the cash column of the cash book. Or if Opeto is paying by cash, by check, then we shall debit the bank column of the cash book. Then Bauba also is a debtor. These ones won't let me actually highlight them. Let me paint them red such that you will see which one is to affect the cash book and which one will not affect the cash book. They also had the creditors, Zotaro, at 4.7 million. A creditor arises from credit purchases. Let me paint creditors another color purple here. So that one is sorted. So we are going to record cash and bank. So I will come here and on first I record the balances brought forward. Cash we said is 750 million, 50,000. Let me put it in red. And then bank is 126 millions. That happened on first. And the details of that is balance brought forward. I can also paint it another color here, such that let me paint it black. That one is sorted. Now, let us go to transactions that happened on second. Cash sales of 15.5 millions. Mukama sold goods on cash basis worth 15.5 millions. That happened on second. Therefore, we are going because we received the cash. Here, received cash. And therefore, if you receive the cash, it means that our cash column of the cash book is going to be debited. So I will come here and I paint this figure red because it is a debit arising from sales that were made on cash. This one is also 100. Let us move to a transaction that happened on card. Bank 10 millions from cash. In this case, if they say bank 10 millions from cash, it means that the bank gained and cash at hand lost. So we are taking cash at hand to the bank. This is a contra entry. It is going to affect both the debit side of the cash book and the credit side of the cash book. And this is the transaction that happened on card. Banked from cash. We are going to debit bank. This transaction will come here. We debit because why? We are banking from cash. Therefore, cash is reducing and the bank is gaining. So we shall credit the cash here. As you can see, we have credited the cash here and we have debited the bank. We are banking the cash. And I have indicated that is a contra entry. We put C on that transaction. Third here, same happening here. Debit bank, debit is the bank column of the cash book and the credit is the cash column of the cash book. That one is done. So that one is a contra entry. Then there is another transaction that happened on 4th. They received a check from Opeto. You remember we had Opeto among our data here. Opeto here. Opeto was our data. So on 4th, Opeto paid by check 9.7 millions. So we are going to debit. Debit is the bank column of the cash book. Debit the bank column of the cash book because Opeto paid by check. Then in the ledger of Opeto is going to be credited by bank because the data, if the data is reducing, we credit by 9.7 million. So now that we are not preparing other ledgers, we are not going to effect this. We are focusing on what goes to the cash book. Good. Now, another transaction happened on 5th, and they are saying that they paid for transportation of goods to the business for millions. I will come here and credit carriage inwards. I will credit the cash because I paid by cash. Carriage inwards. This is the transport of purchases to the premises. Therefore, they reduce cash, and therefore, that's why we are crediting the cash column of the cash book. Then another transaction happened on 6th. Bought office furniture by check, 15,500,000. I will go back to the cash book and credit the bank form of the cash book. Credit the bank form of the cash book by 15 millions. Why? We are acquiring an office equipment by check. Therefore, the bank is losing because of the equipment. Because of the equipment. That one is recorded. Then another transaction happened on 7. Paid Rutaro by check 4.7 million. Now, we are paying by check. Rutaro is here. 7. The figure is here. We are crediting the bank because we are paying Rutaro by check. We credit the bank column of the cash book. So the correct side is this one. The bank column is here. If Rutaro was paying us, we would debit. The bank column is here. So now we are crediting because we are paying off Rutaro by check. Then on 9th, we received rental income by check. When we receive income, of course, cash at the bank increases. So 9th rental income is here. The bank column is debited. The bank column of the cash book is debited. Then on 11th, they withdrew 7.5 million from the bank office use. There is a very big difference because when they say office use, it means that they are withdrawing this money purposely to conduct the business or purposely to do the work of the business. Therefore, these are not drawings, and therefore this one will be a contra entry. Withdrawing from a bank to cash account. So we are going now to credit the bank. We are going. Let us go back. Withdraw from the bank. Credit bank. Debit cash. The cash is debited. Then the bank is credited by cash. This one is the transaction. The transaction is here. Good. Let us go back. On 12th, they paid wages in cash. Paid wages in cash. 2 millions. Now we are going to credit cash. 2 million. That one is done. Then on 14th, on 13th, they made sales 21.5 millions by check. So I will come here and debit the bank by 21 millions here. Then on 14th, paid motor vehicle expenses cash. We are going to credit the cash column of the cash book with the motor vehicle expenses. And this is done also here. I'm going to paint it red. We are crediting. This is the credit side of the cash book. Then on 26th, Barbara rent the business 75 millions by check. Who gave us money, gave the company, gave Mukama money, rent from rents. So the bank now is increasing by bubble. That happened on. Oh no. So there is this Bauba who paid by check. I think we have noted that. Bauba paid by check. The bank form of the cash book is increasing and therefore with debit. Then Babu is giving us money. No, Babu is a creditor to us. But our bank form is increasing, therefore we debit. Then paid general expenses, we are credit. We shall credit the cash by general expenses here. That one is credited. Then another transaction is talking about withdraw 300,000 for personal use. When they say personal use, it is different from office use. When they say personal use, this means these are drawings. But if it is office use, that becomes a contra entry. You are withdrawing from bank to cash. Go from cash, from bank to cash. But if it is personal use, this one, the business is making growth and therefore this one is a drawing. So we are going to credit cash. Cash 300,000. Why? Because of drawings. So the detail in the details column you put drawings and then you credit that amount. Then lastly, bought goods by check 120 millions. We are buying purchases, you credit. They are saying by check. Therefore, we shall credit bank form, not cash. It has corrected this. It has corrected this to bank form. Corrected this bank form. So that is how it should look like. That one is sorted. So maybe we shall do a flashback and we see the bank from cash. We are crediting cash because of bank. Let's have that. Let's go back and see. We check ourselves to see if we entered the transactions correctly. Transaction on this one of that. Especially contra entries. They need attention. Bank 10,000. Credit bank. Credit bank. Yes, this one needs to be adjusted. So that credit bank, then debit cash. And this one comes back here. Then that one and there. So our cash book, all the transactions have been entered into the cash book, and therefore we can balance it off using a calculator because that was the requirement. We can balance it off using a calculator. Let us balance it such that we are done. We have, let us start with the debit side. We have 750,000 plus 15 millions, 500,000, then plus 10 millions, plus 7, 5, This one is giving us 33,750,000. Then I think it should be the same figure here, 33,750,000. Then we are going to the balance of the bank account. I have 126 millions. Then we add back 9,700,000. We add back 5,750. Then we shall add back 21,500. We add back 8,700. We add back 75 million. This one is giving us 246,650 million. And I bet it must be the same figure here. 246,650. So now that is how we balance. Those are the totals. Let me indicate totals here. Totals. Now, after indicating the totals, we now need to look for the balance. Balances. Let us put it in the last column here. And now, here the balances here. Let me put it in a bigger font such that you can easily see it. Good. So now we are going to see now if we add up the cash column, the credit side of the cash column, how much are we having? We have 4 millions plus 2 millions plus 4.05 millions plus 1,750,000 plus 300,000. We have 12 millions 100,000. But now here we have it as 33,750. So we are going to place it. We are going to place it from 33,750,000. So we are going to have the balance carried forward. Balance carried forward of 21,650,000. That is the balance carried forward for the case of cash. And we put it in a bigger font such that you can get it right. 21 like that. Good. So that one now comes here. It comes here as balance carried down. You bring it here. It comes this side of debit side. At the start, because this month is the month of December, then it means that when we are starting in the month of January, the balance brought forward would be 21,650 millions. So likewise, we can balance off the bank column. Now, the bank column, the credit side of the bank column has 10 millions. Then we add back 15 millions, 500,000. Add back 4, 700. We add back 7, 500. And add back 120 millions. We are having 157, 700,000. But on debit side, we have 246, 650. So we are going to get the total we got here. Then we erase it from this figure to get the balance carried down here. 246, 650. We are having 88 millions, 950,000. So that one is the balance carried forward. Balance carried forward. These figures are very important because they are the closing figures. The way they are here, they are closing figures, and therefore they must be brought at the start of the next month. Start of the next month. So these figures are brought to this side. The debit side has balance brought forward. So that is how we balance a cash book. And of course, that is where we can stop from. Next time we shall look at other types, the 3-column cash book, how we enter discounts in the cash book. Then we shall also look at a petty cash book. How do we record information in a petty cash book? So thanks for being with us. I want to implore you to really, if you find that this session was meaningful, you can subscribe and like the video and give us feedback in the comment section. Thanks for being with us. May God bless you.